Good morning, Paul Georgie from Allendale. It's June 13th, Thursday morning, and we just got the USDA weekly export sales numbers. Nothing real exciting from that. Corn, old crop, 81.5, new crop, 68,000 metric tons, well below trade expectations. Soybeans, there was 33.5 thousand metric tons of beans sold. Trade was expecting 0, and new crop 447, right at the low end of range. Wheat within the trade estimate range there. So nothing really exciting other than just a confirmation that we are not getting any exports for corn, and that's a concern and could continue to weigh on the market as we go forward. Other news, we're getting a little pressure across the grain complex here this morning. I think a lot of that is on the perception that rain makes grain, and the rain is beneficial to areas that got rain where the crop is in the ground. And I think that's part of that reason for some of this pressure. Also, you've got a lot of analysts now coming out with their readjusting of their balance sheets after USDA's report yesterday. Majority that we hear anyway is around 1.7 billion carryover in corn. That's about 250,000 less than what USDA had yesterday, adjusting for acres, which they will in the July report, and adjusting for yield. Still looking at a large carryover in corn. Soybeans, many analysts there are increasing their soybean carryover. One of the main reasons is for exports, expecting exports to fall behind this year's level due to good South American production this year. Basis in corn is still strong. Meal basis strong again, causing processors to look for some soybeans, and should support the bean complex, nearby beans anyway. For that reason, the basis there 1 to 2 higher throughout the western corn belt. Eastern corn belt processors are even more aggressive, looking for soybeans here today. And there also is talk around the trade here this morning that there's beans coming from South America to U.S. So we'll see when they arrive and what kind of information we get when they get here. But technicals, a couple things that stand out. The Dees corn closed below the 50-day moving average yesterday. Also, the Kansas City wheat closed below the 50-day moving average. Not a strong technical signal there. In the livestock trade, cattle bids in the south are up 120. Developed some light bids yesterday late. That would be $2 lower than last week. Cutout values, choice down 120. Select was up 15. Packer margins are in the black, however, for our cattle processors, and that could provide some support here as they become a little more anxious to get some cattle inventories and get some cattle around them in order to fill this product need for the July 4th holiday that's coming up here in a few weeks. So that is a possible supportive factor there. The hog market, I think, is also providing some support to cattle right now, in that we see the pork prices continue to go higher. Cutout values there yesterday were 196 higher. Cash hogs are strong. Futures are higher here this morning. The cattle futures might be getting some pressure from spreaders, where they're buying hog futures, selling cattle. That could be one of the negatives that's helping lean on futures right now. So we're watching that very closely, and if you got any questions, give us a call here at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.